G'day there traders, this is just a continuation really where we left off from in the previous share analysis update. So what I'm going to do for you is provide you with some additional share analysis. What I'll do is start with eBay and we'll work our way down the list until we finish with Zinger. Okay, so there's approximately 10 symbols. It's not as long as the previous video, but there are some compelling trade setups which I will present you with in this video. One thing I will say is that there are a lot of shares still going through and are in the middle of earnings season. So if you see an E on my screen, I will make it clear, but there won't actually be a trade setup for that individual share, no matter how compelling it is. The reason why is because we do not hold shares, we do not hold trades over earnings because we cannot quantify the actual outcome of the earnings report until it's released. So say you're holding 100 eBay shares, you're in call contracts on eBay, a terrible earnings announcement comes out and the share gaps down, $10, then that's a catastrophic loss in your own earnings or in your own trading account, your own trading positions, and it's not something that we teach you at Pivot Point Trading. So if you simply see an E, we're being patient, we're being disciplined, and we're just going to skip that trade. So to begin with, how appropriate, we've got eBay, and we have earnings coming out on the 29th. So that's a Tuesday. We cannot fit a trade in for 2 days, no matter how good you are as a trader. So what we're going to do is we're going to move on to Facebook. Now, Facebook did announce earnings. There wasn't really too much of a gap, but it does give us a very nice neutral trade opportunity on Facebook. What I have here is a trade below 53.30 on the bearish side. We also have a trade above 65.14. Now this is quite interesting because we seem to be having a rounding top or establishing a rounding top on Facebook. So please pay attention to 53.30 on the bearish side. If this does trigger, look at the lows which we have at our disposal. The first low, which really comes in, is all the way down here at about $45 a share. Let me just get the actual amount. It's $46.06 a share. That is huge. So please pay attention to Facebook and what it is going to do over the coming days. Obviously, the earnings announcement has come out. We've got two really bearish engulfing Marubozu candlesticks, and then we've got just a continuation candlestick on Friday. So this is very, very bearish. We could also be establishing a larger head and shoulders topping pattern. All in all, this looks very, very bearish on Facebook. Let's move on. We've got GILD, Gilead Sciences. Earnings did come out last week. Not too much has happened since we are at a pivot point. We are at a resistance level. The existing trade still stands. We've got a 60.930 bearish opportunity with a 78.95 bullish opportunity. Expect this just to fizzle out a little bit until we get that clear momentum either higher or lower. Let's move on to IRM. IRM, unfortunately, earnings is coming up, so that really falls into the previous discussion that I just made about earnings and how we do not trade into and over earnings. What we can do, however, is look at MA. Unfortunately, again, this falls into the same boat. MA has got earnings coming up, this time on the 1st of May 2014. So I do believe that is even this week. Let me just bring up my calendar here. It's actually Thursday. So Thursday this week is going to introduce and bring about the new month. So we cannot get into MasterCard. One we can do, however, is MU. Now, MU did report its earnings, I do believe, during the middle of April. And as you can see, it's absolutely taken off. We've had this long-term perspective at 29.13. That in and of itself did not trigger due to the fact that we were overextended over 10% from the base down here. What we can do right now is just say to ourselves that if we break above $26.68, then we can jump into MU bullish. At the moment, if you take a look at the exponentials, we do have a strong bullish exponential moving average cross. You can see price pulling away. We have open gaps. Everything about MU is bullish. If I had to place a bearish trade, which I'm very reluctant to do so, it needs to be down here at 22.51. At this location, we would have broken below these old resistances, new supports levels, and this is a very, very strong support level. As you can see, for the whole month of January, we established it as a support until we broke out and moved bullish. So 22.51 is the bearish trade opportunity on MU. Here's Tesla. Tesla worked out as a fantastic trade about 2 weeks ago. You can see the entry, 197 and 183 was the target. That happened in 2 days. Very simple trade. What I'm going to do is move these triggers now just so we can get a new expectation of where price looks to be moving. Tesla, again, a little bit choppy, a little bit funky, but it's happening all around the 10, the 20, and the 50 exponential moving average. That is very well expected with a stock such as Tesla. You can also see we're bouncing off that 10. So the long term, pardon me, let me just move that. The long term trend of Tesla is still bullish. All right, it's still moving higher, however slowly and however boring that may be. So until, first of all, we break below, all right, until we break below 170.10, I have a long-term or intermediate-term bullish perspective on Tesla Motors. What I want to see Tesla to do in order to trade bullish is to get above 222.30 cents. That is above where we're trading it at the moment, around $200 a share. It's also above this most recent intermediate or intraday swing high. All right, so 222.30 on the bullish side, up to resistance about 245 a share. And we've got 170 on the bearish side, down to about $152 a share. Very interesting to see which way Tesla Motor decides to move. Twitter has been an absolutely fantastic share to trade most recently. However, here we are at earnings. It is coming out on the 29th, which appears to be a Tuesday. Not enough time to trade. So Twitter's off the radar this week, or unless we get an earnings gap on Tuesday. Yahoo is something that we can trade. You can see we had an earnings gap last week, and since then it's failed. It's failed the gap. It looks very, very bearish. So what I can do for this individual trade setup is set up a trade about $33.77 down to support down here at 32. I just duplicated the wrong line. Let me just do that down and drag it down. 32.62 is the target on Yahoo. That is the only trade I have. For a much longer term perspective, I can give you a trade down here at 31.55, trading down to, and this is where it gets exciting, down to $29 a share, and then all the way down to 27, and then finally down to about $25 a share. I'm not saying it's going to happen, but if we do break below this 31.55, then yes, these three targets are very likely targets to actually hit, and hit very, very quickly. To finish with, we have Zinger. Now with Zinger, this has been another fantastic trade setup since we broke $4.65 a share back in early April. Since then, we haven't really done too much. We haven't had any trade setups. However, I can set up a 375 bearish entry, trading down to about $334 a share. Am I personally trading Zinger at the moment? No, I'm not. It's a very cheap share. It did get exciting when it was moving up around the $5 range, but you can see since that island reversal, or at least the exhaustion gap, it's really, coming back down to the levels which it's been really succumbed to since the year 2012. All right, so what was once very nice potential for this to break out to, those $12 highs again, it's really been slapped in the face with very, very strong reversal signals, very strong volume, and really it's not a share that I'm looking at trading. So thank you so much for watching this analysis video. Give it a thumbs up, give it a share, give it a like. And I'll do another one anyway for our third and final watch list for this week. So thank you very much, everyone. I'll catch you all during the week. Goodbye.